Hello, everyone, and welcome to another review of the 15 NAS100 strategy. So, what we are looking at right now is the full month of February. As you can see there by the bottom left corner there, it's the month of February. So, these are the trades we took, and as you can see, we have had some big wins here and there. So, as usual, I'm gonna be reviewing just a week out of all these trades. So I'm gonna be looking at the week of, let me just pull out my calendar. So we're going to be looking at the week of the 5th until the 9th. So basically the first week, the first full week of February. So I just wanted to show you all the whole month, and basically the fact that we took trades almost every day. But on this particular week, we actually missed the Monday trade. So as you can see, the first day we traded was on the 6th. So basically on the 5th, I just didn't see a setup in the market. As you can see here, this was Friday. This setup here that appears here, but this V shape here, as you can see, the market created this move. This was the 5th. So on this day, I just saw the market consolidating, not going anywhere. And by the time the market opened, price was around the moving average. There was no structure basically, so I just didn't know. I just wanted to just observe the market. And there was also too much noise, as you can see on the calendar here, the 5th of February. Uh, Also, I realized on the January video that I made a mistake. I used the wrong calendar for these events. That is why I was unable to explain some of the moves. But I corrected my mistake. So for February, I pulled out the right calendar, as you can see, from the 5th, 7th, 8th. Yeah, so on this Monday, we definitely had fundamentals playing a part in the market. But as you can see, the market did go down, but immediately pushed back up. So this day was just a no trade day. So on the 6th, this is how the day began. As you know, I usually just look at all the time frames. I just watch what's what. So around 1 o'clock, I I saw the setup, and I just kept analyzing. I just waited for the market. So around 4 p.m., we saw that the market had moved. We marked this area as the demand zone, but obviously the market pushed a little bit lower, which is these lows here, which match with these lows here. So also I was looking at the market on the 5 minute. So that's what happened there. So by 4:30, as you can see, the market went against us. Price just pushed to the downside. Then by 4:45, I changed. I came up with this other setup. So I just thought, okay, if maybe this, because the market was just going up and down here on the first 15 minutes. So I just thought, okay, the market maybe was what was only gathering liquidity because we are at the moving average. I don't know if you can see here the gray line, this gray line here. The price was just at the moving average, but also we had this resistance, which is the supply, and obviously this demand zone. I did not correct it, I had to move it here, but When the market is already moving, sometimes stress takes over. As you will see on the next screenshot, the market pushed further to the downside. So basically, on this day, we had two setups that got invalidated, as you can see there. Now, on this third setup, I did not share with the group because I do not like uh, chasing chasing the lows of the market, because chasing the perfect entry will destroy your account. So here I was just looking at, okay, we have a ascending channel here. Maybe the market will respect this channel, but obviously, as you can see, what I missed, completely missed here on this day, is the fact that, okay, we had this area as supply, and the market did test that level and shot to the downside. So I guess I was just biased, and I was also hungry for the market because remember that on the Monday, the previous day, I did not trade. So I was just being biased. As you can see now, I I identified this area as an order block. As you can see, we have this sell candle here. It's hard to see because now my candles are black and white, and I'm a bit zoomed out. So as you can see, price pushed even further to the downside. So this day was a complete mess. As you can see, I also even removed my ascending channel there. So by 10 p.m. in the evening, this is what the market looked like on this day. So this is on the 1 hour. So as you can see, even on the 5 minute, my ascending channel was destroyed. Everything was destroyed. But what I want you to notice also is that price is in a range. So basically, a range is when the market is moving sideways instead of going up continuously. So I was chasing the lowest price for the day because I thought maybe the market will actually start trending upwards. But turns out that we were still stuck in a range. So you can see it clearly on the 1 hour. So that action occurred here. So on the 1 hour, this is the whole thing. So this is like the previous week. Yeah, from like the last week of January, we had that break and we started creating this range. So I used this block to highlight the area. So I cover the highest and lowest to show the range. So that's the range we found ourselves in. So on the first day, we we hit stop loss multiple times, as you saw. The following day, around 10 in the morning, as you can see, the low that I was uh chasing the previous day did okay at 7480. So the market just went up from there. So had I been on the charts after 10 p.m., I would have caught this move to the upside. But you cannot keep risking non-stop. Your account will deplete. But the following day in the morning, usually I just come to the charts to analyze. I do not take trades around this time. But on this day, I don't want to lie. I just saw something clicked. My mouse is messing up my thing. Okay, so something clicked. I saw that the market now is gonna start moving to the upside, and I think that started drawing. Yeah. So I before I even placed my channel tool to show that this is an uptrend, I already had seen, just from intuition, just from experience, just from spending time with the Nasdaq chart, that the market was about to start going up. There are obvious signs on the chart, but I'm not gonna just share the secrets. If you want to know more, leave a comment down below. So this is how the day went. So as you can see, the time changed there in the afternoon around 3 in the afternoon. We hit TP. So around 23 minutes past 4, this is what price did. It went back to that supply area, but then because we are at this area for the fourth time now, I believe that we are going to break this level. So instead of sending out, because I send my signals around this time, which is 4:30 for now, as we move into, I think, starting tomorrow, which is the 4th, I think we are going back to 3:30, but I'll confirm that. I'll just search on my phone. Let me confirm that actually. Okay, so I just confirmed daylight savings time will start on the 10th of March. So we are going back to 3:30 next week, Sunday. So by the 11th, we'll be trading at 3:30, not 4:30. If you don't know what DST is, just go search on Google. I'm sure you're gonna find the first results there. So I send out a buy stop because I'm anticipating a breakout. Because as you can see, we were the market respected the ascending channel there. So we are from support to the resistance. As you can see, we already broke through the supply zone there. But because I gave this as a buy stop, the market was that price did not trigger. So price started pushing to the downside from there. So I just saw this as an opportunity to send a better entry. So 15 minutes later, I sent out this setup. As you can see, the time there. As you can see there, I sent the that different setup. So the market now started respecting our setup, and we had our TP in the signals group. So I had this setup in the morning and I send this to my signals group. I usually don't send my London session signals because London session sometimes is kind of tricky to trade. But as I said, I was gonna show you guys how I was able to spot that. So as you can see, these are my entries. That red line at the top is my TP. Yeah, so as you can see, I went in heavy on this day because my trades were confirmed. So here's the thing that I want you to see. Just gonna share it. So remember that 3:30 is here. So I'm just gonna share these things. I was trying to hold back, but I think I'm just gonna share these things with you guys. London session. So the time here at the bottom is the South African time. The time at the top is uh the universal time. So as you can see, the London session is between when it comes to the South African time, between 10 and basically 5 p.m. is the London session. So the overlap occurs from 3 until 5. So this part here is where the most volume is at. But sometimes during the London session, we are able to catch trades that are that can be profitable for us. So on this day, what I noticed is that the market did create what we call consolidation. Consolidation is where price just stagnates in the same range. So price did not go very far on this day, as you can see, but eventually it went up. This upwards movement occurred when we look at the South African time. This upward movement occurred during the Tokyo session, which is overnight. This gray part here after, so 24 is obviously midnight. So as you can see, these are the early hours in the morning. The gray part, it ends. Tokyo ends at 10 in the morning, where the London session starts. So what happened here is consolidation, and what happened here in the during the Tokyo session overlapping with the London session is what we would call manipulation. After the manipulation, because the manipulation is a convincing bias, and then going back down to collect from those who move their stop losses into break even, especially those who enter exactly at the open of the Tokyo session. So price moved upwards, then back to the downside. That's called manipulation. During the London session, what we were able to notice is that the the consolidation occurred, the manipulation occurred. What was left to occur was the distribution. And these three things tend to repeat in the same order, but don't expect them to occur in the same sessions. So don't expect consolidation in the New York session every time. Don't expect manipulation in the Tokyo session every time. What I'm saying is that they occur sequentially: consolidation, manipulation, and then distribution. So these things may occur. Consolidation usually occurs during the night, as you can see with this. So during the Tokyo session overlapping with the London session, that's where you will see the manipulation during the London session, and then distribution in the afternoon, which is during the New York session. So I was able to see that the consolidation occurred, the manipulation occurred. What was left was distribution, and I was able to plot my ascending channel by just plotting on this level here, because this price had occurred already. So I just had these prices guide my channel. So from there, price just went up. So this is the distribution that occurred here. So a big win on the Tuesday there. Wednesday, which was the 8th of February, as you can see there, this is how price started in the morning. Usually I just come to the chart to just see what is what. So on this day I extended my channel, as you can see there. Oh, so I can see here by the time difference. As you can see, by 2 p.m. this is the last screenshot I took at 2 p.m. So what occurred on this day is that we had load shedding. Usually load shedding is when we don't have electricity for 2 hours at a time. So when electricity goes at 2 p.m., it usually comes back at 4 p.m. or half past 4. So on this day, we did not have electricity, but as you can see, the market open occurred obviously at half past 4. So by 5 p.m., I had a setup. And what you can see here is that the market just consolidated. Even during the London session, nothing occurred. So I was just guided by the channel. So I expect the price to just keep on going up. As you can see, also we went below the moving average and then we are above it. Also in my mind, I saw that we have this supply zone that was respected. Price came back to grab liquidity. Now I'm expecting this level to be broken. So this is the signal I shared in the group. Now what I want you to see is that okay, by 8:30 in the evening, we the market was still stagnating. Usually what would have happened here is that because the market consolidated in the London session, I would have expected manipulation then distribution. But because the market proved to be very bullish, I was very positive about price movement. I was very positive about this setup. So as you can see, price did come back to our entry level, but still continued to the upside, respecting the channel. So that's the my entries there on the what you call on the MT4. Yeah. So I was holding the few trades from the previous day here. Usually that's what I would do to maximize my profits. Now comes the Thursday. Or is it the Friday? What day is this now? Am I mixing up the days, guys? No, this is the Friday, the 6th. Yeah, we started Tuesday, Wednesday, Thursday, Friday. I did not skip a day, right? Yeah. Basically on the 8th. Oh, I'm looking at the date there, it's confusing. So the 6th, the 7th, the 8th, now the 9th. Yeah, so came to the charts, started analyzing, and I still saw, but I want you to see the difference here. The channel on the previous day was like this. Now I'm looking at the channel in this structure like this. So I spot that okay, even though we have been so bullish the whole week, I saw this as an opportunity now to sell because the market was struggling to break out of the channel to prove that price is still bullish. But we did hit stop loss. Actually, I want to confirm here. Maybe this was like an event. Nope, there was no event. It was just a normal day. So no fundamentals. But as you can see there, the price did. So that basically was like what Nasdaq usually does, which is stop loss hunting. But I guess that move scared me, and I even fell for it instead of uh, staying with my sell and moving my entry to this uh, better price here. I changed my bias into being bullish. So this sell here is obviously from this setup because I thought the market was gonna be bearish. So I also saw that okay, no, price can come back to this level, which was supply, now 10 demand zone, and price did respect that level. So I want you to see something because maybe this setup is a bit confusing. The market did break right this previous supply here. It moved to the upside, but price was stagnating. I don't know if you guys know uh you need to know how to read momentum of price. Like when price is moving to the upside, when price is bullish, when it starts going sideways, or when it starts creating small candlesticks, it shows that liquidity is running out. So the market needs to grab more liquidity. So what happened here is that for those of us who were selling, uh, the market did grab liquidity from us, and then what happens? It creates those small candlesticks again. But what happens again is that price pushes down within the channel. This would have been a great sell if price would have broken below the moving average. I don't know if you can see it. I made it gray because I don't want it to be messing up my channel. But this gray line here is the moving average. I hope you can see it just by following my mouse. So here, where price is at here is the midpoint of the channel. It's also the moving average, but I don't know if you can see this dotted white line here is actually showing us that this level is was previously resistance and now it's support. And what price does is that it goes to that level, obviously it pushes a bit lower, but I want you to see what happens next. As you can see, the buy was valid, but I want you to see something. I was able to catch this sell because usually what price does to grab liquidity from a level, from, let's say, this level was resistance, now 10 support. As you can see, the market went from that level and created like a support structure here, which was resistance. Unfortunately, I did not move this box up to this level, but that's what happened there. So price pushes below the moving average and also the midpoint of the ascending channel, but immediately price closes above the midpoint and the moving average, confirming that price is still bullish. If price had closed below the two levels, I would have been skeptical of the buy. But as you can see, experience intuition pays. So eventually we hit TP. So this was like 20 to 11. So late at night on the Friday, the market moved into our direction. So as you saw, we did get stopped out at first. That's the risk that comes with trading immediately at the market open, but sometimes it pays off. You just need to know how to read the market. So that's what happened on this Friday. So I hope, yeah, this was for the week of the 5th until the 9th of February 2024. I hope you took something out from this video. If you have questions, please leave them in the comment section. That's all. Tango.